With Donald Trump once again trying to push the crypto market down, the savior may have just been Jerome Powell. Now, he was talking at the banking committee and had some pretty interesting things to talk about. Quantitative tightening coming to an end. This could be incredibly bullish for cryptocurrency markets. That aligned with some very interesting things going on for the bank, inflation data, and much more. Well, guess what? I'm going to break all of it down in this video. This is going to give you what is going on in the market, what to expect, and why Jerome Powell may have just been bullish for your cryptocurrency portfolio. So go ahead, smash up the like button to a brand new all-time high. And don't forget, every day we're covering the crypto market here on the 2Bit Crypto channel. So hit that subscribe button as well. And with that being said, let's get into it. So as the market started to show some signs of recovery, Donald Trump decided that they were no longer going to be buying Chinese cooking oil and dumped the market, well, including the S&P 500, down to around 6,631 from those opens around 6,668. The markets of Bitcoin, Ethereum, and many other altcoins, unfortunately, were affected as well. But what we did get, though, was an unlikely source of optimism. In fact, Bitcoin then rallying over 2% on the back of Jerome Powell's statement. Now, there is a bit to break down here, not too much, but it is important to understand that, well, Jerome Powell suddenly went bullish on the markets. He suggested that data is showing that the economy is largely where it was in September. Well, we all know we got the first rate cut for September, and that data before the shutdown suggests that growth may be better than expected. You could see this with GDP, as we talked about previously, coming in at a revised 3.8. The labor market weakness justified the September rate cut, and this may play out furtherly. And one of the big notes he said, quantitative tightening may be coming to an end. And what he did reference was the reduction in the Fed balance sheet. Now, why is the Fed balance sheet such an important thing for Bitcoin and the rest of the crypto market? Well, as you can see here, the currency in circulation, dollars go up. And actually what we're seeing is things like treasury balance starting to bulge up, but the deposits of depositories are coming down. This is cash equivalents, as well as kind of some of the key things that we have, common examples being bank credit unions, as well as loan institutions. These are the things the Fed is trying to hedge against. This is good news. But why is the Fed balance sheet coming down even more bullish? Well, think of this. We saw the Fed turn the money printers on like crazy ahead of the 2021 boom in the cryptocurrency market. Ever since the top coming in 2022, which was kind of the start of the bear market, the Fed is trying to be reducing that balance sheet, basically clawing back the money it printed in order to try and quantitatively tighten the markets, and basically restrict growth. This could be coming to an end. What does this mean? The printers might be going back on. And if you've been part of this channel for a while, this is going to be the big catalyst. And guess what? It could all be starting to play out in Q4. Think of this. US inflation currently sitting around 2.22%, which is kind of slightly above the Fed's target, but within the same range that they've been for a while. And we know banks have been hedging against the fact that money printers may be going back on. Gold has been stacked by banks, including other entities, like crazy. In fact, we are now starting to see some of the highest levels this century of people holding gold. So how does this then play into the crypto market, and why should we be bullish on what Jerome Powell said? Well, the Bitcoin performance in bull markets is entering the later stages, and this can be seen from the previous two halvings that we've got. Now, if you subscribe to a slightly later bull market cycle top, which could be anything from December 2025 into early 2026, well, we are just about to move as we've done on the previous halving cycles, and this could play out favorably as we've been talking about into Q4, that Bitcoin may start to rally. We also know that the supply realized and the MVRV stabilized above the 135-day moving average, signaling that, well, these are massive coolings, but structure remains intact. And you can see that on the moving average and equally the 21-day moving average, which has been very bullish and a key support level. And guess what? All are now still intact. We saw record inflows of stablecoins into exchanges, 3.2 billion ahead of, well, PPI data and CPI data. What does this tell us? Markets are expected volatility, with potentially people looking to get back into those positions. Remember, I discussed the fact that Managed Capital on Friday actually just went into stablecoin. It didn't leave the market. An expectation right now on PPI and potentially CPI coming in 2 weeks is very, very favorable. And the fact that risk appetite once again broke new records. Total US options now volume reached a record 108 million contracts on Friday. So although the market's dumped, appetite was still there, exactly as we talked about. And the same for the cryptocurrency market. People are now slowly entering back into leverage positions. You can't teach some people that just buying and holding is a sensible idea. And this on the back of the DOJ seizing $15 billion in Bitcoin from a massive butchering scam and moving $75 million out of that wallet to, well, at the minute, an undisclosed wallet that's just sat there. Oh, and if you wanted anything more bullish, The trader that went massively short on the Friday position, well, he's closed everything as well at a loss of around $100 million. Now, I'm not saying that's a good news story, but certainly starts to paint a picture of what's coming. So when we break this down, you've got Donald Trump at a pretty important point with China. Is there going to be a full-blown trade war? Certainly at the minute, the suggestions are that risk is on when it comes to that. But Jerome Powell is starting to, well, ease off on his hawkishness. Again, when we see rate cuts coming, expectations are further two for the rest of the year, but that Fed balance sheet is going to be the key point. If we see this reduce, that means the money printer potential could go on. And actually, this could be aligned to the stimulus that we've talked about with Donald Trump, which could push Bitcoin and the rest of the crypto market to brand new all-time highs by the end of this year. It's certainly all starting to be aligned. Short-term fear may play out to be long-term greed in this market. And well, if you ask me, that's a pretty bullish way of looking at it. So let me know what you think of all of that in the comments down below. If you want me to break down a little bit more data like we've just done in this video, talking specifically about a bit more macro, how it affects your portfolio, let me know in the comments. Smash that like button as always. And don't forget, if you want to get access to our premium Discord, become a channel member. It's going to cost you about $8 a month. It helps the channel out and it gives you all the alerts in terms of trades we're taking on, as well as brand new coins into the market. So until next time, thanks for watching. Don't forget that like button and I'll see you next time. Bye-bye.